Basically, guys, what I'm going to be going over is my chart setup, including my indicators, and just kind of talking through my indicators and what they do and why I use them, and basically all of that good stuff. All right, so I'm going to take you through several different things. One of my biggest pet peeves is probably an ugly chart. Like seriously, so we're going to go through that as well. We'll be using Thinkorswim, going through the appearance and just making sure that we are good to go. So again, welcome guys. Thanks for taking a little bit of time with me. Let's go ahead and go through my chart settings. I'm going to talk about my indicators, but before I do that, just want to tell you a little bit about myself. So my name is Jonathan. Right, I am the former owner of Trendy Trading. I now am here and happily here with Simpler Trading. Very happy to be here. One of my longtime mentors, John Carter. So it's an absolute blessing to be here. But not only like to be here and be underneath his wings, but also to be able to share my content to a broader audience. So I'm pretty pumped up. But let's go ahead and start here. So my style of trading includes supply and demand, if you did not know that. A long time ago, I attended Online Trading Academy. I learned some really cool stuff about how to think like an institution. And so I like to identify supply and demand structure, okay? Now, the type of things that I like to trade, options. This includes swing, intraday, a couple days out, leaps. I mean, everything you could think of. And then we trade futures first thing in the morning and typically through the day if we got some nice range. I don't mind selling naked as well. I like to do spreads. I like to trade some butterflies. I love to trade equity as well when the IV is too high or the market's a little choppy and I don't feel like losing on my premium side. So if I'm not selling premium, but I want to get in on the action that could or could not be there, then I'm using equity to trade as well. All right, so I'm going to open up the screen, make it just a little bit bigger right there. And again, on futures, when I primarily trade futures, I teach and or I use them to hedge. So for example, this morning, we were looking for the market to pull back into the zone and we broke a zone. Okay, just so everybody knows, we had a zone right here as well. It broke through there, and then we found this pretty nice 30-minute zone where we came right into, and then we went long on SPX calls here. All right, so, right now, in the middle of this training, what I'm looking for is a rejection probably between 29 and 43. Now, if we bust through 43, I'm going to be really happy. Okay, now that's all I'm going to really talk about when it comes to trading today, but I just want you to know why I have this particular chart on the screen. Okay, now first, let's talk about a chart. Okay, I'm a big stickler when it comes to charts. First, when you look at my Thinkorswim chart, you're going to notice that it's very dark, right? It's black. And I like it this way because the candles, the levels, anything that's on my chart is going to pop, right? I want to be able to see it. I don't want too much of a distraction on my chart. So the first thing we're going to do is just go through a simple chart setup. The next thing that you're going to notice on my chart is right here. And believe it or not, folks, I'm very transparent. I just learned about this probably about 6 months to a year ago. I can't remember exactly when, and it blew me away how easy it was. So I want to make sure that I teach that as well. And what this allows me to do is go through multiple time frames because I know if you're a new trader, one of the hardest things to get used to is flipping through multiple time frames, especially on Thinkorswim sometimes, because as you do that, it takes a lot of data and it's trying to populate that data and it can take a while to get to that screen. So I'm going to show you a trick, okay? But the first thing I want you to do is just kind of pay attention to my arrows, okay? So right here, this cog, we're going to go ahead and click on that together. All right, and then we're going to come over here to general, and I'm just going to go through, and you can take little screenshots of this, or you can come back and take a look, okay, just to make sure that this itself, that you can understand what I'm talking about, okay? All right, good. So on the general, all right, just pay attention to what I have checked and what I do not have checked. If you have questions, please ask while I go along, okay, guys? So again, On general, this is everything that I have, okay? I want to show my studies. I want to highlight studies when I hover. Synchronize crosshairs on positions, notify me of unsaved drawings, show price subgraph, show symbol logo. I want to know what symbol I'm trading. Show last price bubble, okay? Data box off, my tools off, snap drawings none, time zone for me, I have it on local time, okay? Let's go ahead and go to the next one. This is really important, okay? So price axis auto is actually what I want this on. Everybody, auto, okay? Notice down here, for me personally, I have nothing checked here. Expansion area is 10% up for me. That means up here, 10% down, okay? And then all of these, enable left axis. This was really important when I first got started. I want to make sure that this was checked here, okay? Over here, Roberto, just really quick, are you using TD Ameritrade or Thinkorswim? Just want to make sure before we go forward. You are. So you should have this symbol right here. So make sure you are looking at a chart and you should have this right here. And then the time axis, so we'll get you squared away here, Roberto. So we have two Robertos. So over here in the other room, Roberto. All right, so time axis. Let's go ahead and move here. For me, the biggest thing here is the bars to the right. Now, why do I have so many bars to the right? I actually like to see a little bit more to the right. Like the last thing that I want is for these candles to be right up against this shaded area in here. So I allow myself some room to work with. And the reason why we do that is because in supply and demand trading, unlike many other trading techniques, is we are able to actually forecast where price is going by looking at structure. Okay, and we'll get into that a little bit later, but right now this is important as far as chart setup. Okay, now as we get to my favorite time frames, now notice I have a lot of different time frames in here. I will tell you right off the bat, I get this question a lot. Hey John, what are your favorite time frames to look at? Well, for me, folks, my go-tos are going to be the 5-minute for entry, especially on intraday, okay? But I pay attention to very high time frames. So some of my favorites are actually going to be, let's just go ahead and highlight them. I actually use a yearly for leap and swing trading. So that means every candle represents 1 year. Then my go-to is going to be the monthly after that. And then the next is going to be quarterly, and then weekly, and then daily, then 4 hour. Everything else that you see in here, I'm able to toggle through really quickly if I need to. Now, if you want to add a time frame into your chart, it's pretty straightforward. You go to add time frame, and then you could come down here and you could say, okay, do I want intraday? Notice when I click intraday, it gives me the option to use days, okay? Now, if I click in here and I go to daily, things change down here. All right. So down here, we pick the interval, then we get the aggregation period, and then we add that, and then it will come right over here. Okay. Now let's get to the good stuff. All right. Because I don't want to spend too much time on this. All right. Let's get to the appearance. The appearance, and by the way, guys, you're getting your first yellow bar here is trying to pop up on your 30-minute, okay? Now, appearance is very important to me. This is where really, my wife is an artist, and I really appreciate good art. When I look at a chart, I think of, you know, this is my canvas, this is my painting, and I want you guys to be able to see what I'm painting, all right? So a couple things here. I get these questions a lot. Hey, John, why do your candles look the way they do? Well, first of all, they're called candle trend. They're called trend candles. Okay? So trend candles. My candles are hollow or filled, and that's the way that I prefer them. When they are filled candles, they close at the bottom. And when they are hollow candles, they are bullish candles and they close at the top. Okay? Just something to note. Now, if you want to change the color of your candles and really make them pop, then you're able to come in here and see this color palette when I come in here and I click there. And don't worry guys if I'm going too fast. You can go back and watch this as many times as you want. And you can reach out to me and ask me questions if you like. Okay. So right here we have a color palette. But notice if I come in and I select more, I can get in here and I can find myself a really nice green color within the palette that really speaks to me, something that's really going to stand out. Okay. Now I make sure that the color of the candle is also the same color as the border of the candle. And the same thing with the red candles. I can come in here and change these as well. Okay. Moving on down. This is where it really gets important as well. I want to see the wicks of my candles. Hopefully you do too, because the wicks really paint a beautiful story for us. Okay. Moving on down. Let's keep going. This is where it gets interesting. Thinkorswim doesn't make it entirely easy to understand like where to click and so forth. So on here, I have the cross. Okay. That's just for me, crosshairs. Okay. Snap crosshairs too. I got none. And now right here, I have just, nothing is clicked in the volume bars. And then the volume bars themselves are this color. Okay. I don't use volume bars myself, so it doesn't really matter. And then down here on background, this is important. Are you guys ready for this? I know, right? It's important to me. I'm pretty passionate about it. But right here where it says background, your template that comes with this setting is like this really ugly, like dull gray. What you have to do is come over here and make sure that you click more. Okay, just like I showed you guys before, we're going to click more. Okay, and if you notice on this color palette that's right here, I am clicking right there. That very last box or square right there. The one that's actually black. Okay, not the one that's gray, not the one that's sort of black, the one that is actually black. Okay, let's go ahead and X out of there. So I have that as well. Now the grid, I don't really know why anybody would use a grid, but for me, it's just noise. I don't want it on the background, so I make sure that it's unchecked. Okay, anybody have any questions about that? If not, let's go ahead and move on. Now that's just the appearance of this chart, and then you can hit OK and apply and then come back in here. And then we come over to equities. Okay, no problem. So equities, notice that these are all different. Equities, options, futures, Forex. Okay, so equities pretty much covers everything. All right, except for your futures. And if you guys trade Forex, you can do the same thing over here. Now, notice on the equities chart, okay, up to you what you want to do. Now, this is going to be applied, by the way, this is going to be applied to the chart that I have open, which right now is the 30-minute chart that you're looking at, okay? It's the 30-minute chart. So if you notice, if we X out of here really quick, notice that I have no corporate actions. When I say corporate actions, what I mean is like their earnings or their dividends and all that good stuff. I just want a really clean chart for this particular time frame, which is 30 minutes. Okay. Now I'm going to show you how we get multiple time frames in here in a second, but I want you to understand, I want this chart to be as clean as I can make it. Okay. So I don't have any corporate actions. Let's go up there and click one more time. Let's go ahead and go over to the equity. Once again, notice they're unchecked. But if you want them on there, folks, all you have to do is click right there, hit apply, say OK. All right. And then it would show up on your equity chart. All right. Now this is futures, so you're not going to notice it there. Okay. So here's my next big secret. Okay, that I like to talk about, that I think is really important. I think it's really neat. And that is, notice that I have the extended trading session on. People get really confused when they see my chart because they're like, John, you really like the pre-market, but I don't see pre-market on your chart. Does everybody, any new traders out there that understand what I'm saying or don't understand what I'm saying? Does anybody see the difference from my chart compared to, like, say, if you're new at trading and you're wondering, like, why do I have, like, why does it look so crazy and messy, right? That's because most traders, all right, what they have on their chart is they come over here, let's go to futures, and they have right here, notice where it says, big deal, guys. It says show extended hours. So my extended hours are on, but I do not have this box checked. And that box right there is the one that makes the big difference. It says highlight extended hours trading session. Notice if I click here and hit apply, notice what happens to my chart. Now that might not be a big deal to you. Now I'm here to tell you guys right now, I love pre-market. I use data, and we'll get into that here in a second, for one of my indicators. And a long time ago, I was told, hey, pre-market doesn't count. Boy, were they wrong, because our PMZ indicator is one of our biggest indicators out there. People absolutely love it, and we're going to cover it here in a few minutes. I love the pre-market. What I don't love are these gray boxes. Like, I don't need to see these gray boxes on my screen. It's just too busy for me. So once again, I'm going to come in here. I'm going to go to futures, and I'm going to uncheck the highlighted extended hours. Once again, folks, this is a really big deal for me. This is how I like it. Okay. Now, notice these settings that I just showed you guys, you can apply them any way you want. So if we go over to equity, as I said, if you want to see the corporate actions, or you want to see a CNBC video, or any of that type of stuff, you just check it and you can hit apply. Okay, let's go ahead and hit apply and move on. All right, so once again, you can see that those areas are no longer in the chart. Okay. Anybody have any questions about what I just showed them? And by the way, guys, we got very, very close up here towards the bear channel. If we can get above the cloud, bulls will start looking a little bit better here. But so far, the zone itself has worked to the upside, but timing is the variable. So we're really going to need a bigger push here in order to see SPX really, like, dive into some profits. Okay, so just want to update everybody on that. All right. All right, so the next thing that I want to go over with you is going to be my chart setup, why I do the things I do, and talk a little bit about my indicators. Okay, I shouldn't say a little bit. I'm going to talk to you about my indicators, and I'm going to give you insight on what they do, why I use them, and how I came up with them. Okay, so are you guys ready for that? So let's go ahead and do that. And this is really great for all of our members, but also if you guys are just interested in supply and demand, this stuff will kind of open up your eyes. Okay, so let's get over here to, give me 1 second. See if I can find my scratch pad. There we go. Let's just talk about supply and demand really quick. Okay, and we're going to take this to a just, I don't know. Let's go to Tesla. Okay, and we're going to go to a high time frame. All right, now notice I'm clicking through the time frames, and we'll get to that here in a second. All right, notice how I can go from a monthly to a weekly to a daily to a 4-hour, and I could do it just by a click of a button. All right, and I suppose what we should do is actually go over that really quick before I get into the indicators. Okay, now how do you do this? Right? Is anybody out there interested in how you do this? Because if you're not interested, then, we don't have to go over it. But if you are, it's a very quick, easy way to run through your different time frames. I'm telling you right now, you better know your time frames, because there's nothing worse than not knowing that you're about to run into a heavy amount of supplier resistance right before you take a trade. Okay, so let's get to that really quick. So the first thing that we're going to do is I want you to get a chart, okay, and any chart. And I'm going to detach this chart, right? We're in Shopify right now. So another trade that we're in, and it's working so far. And I just detached the chart. This is just a regular chart, okay? And then we got to sit here and wait for it to pop up. So give me a second. All right. So this chart right here is Shopify. Okay. And what we're trying to do is I want to make multiple time frames out of Shopify. Now it's up to you what your favorite time frames are. Everybody's different. So I want to ask you guys a question. How many time frames do you typically use? Seriously, if you guys could answer me. Do you use two? Do you use four? Do you use five? What is the average number in here of time frames that you guys use? And I'm getting a lot of 3 to 5. Mikey says almost 8. That's awesome. I have a lot of different screens as well, so I can use them, but I see a lot of 3 to 5s. Okay. So all you have to do is you're going to come up here and you're going to click this box. Okay. And you click this box and let's just go for right now. All right. I'm going to do 3, but if you love 5, you can do 5, you can do 8. It does not matter. I'm going to do 3 really quick. Now notice, this is the first thing you're going to see. And the reason why Thinkorswim gives you this weird, blank screen, it just says charts. I'm not going to lie, when I was brand new, I was like, what do I do? I was like super confused. And it took me forever to realize that all I need to really do is come up here and actually put a name in. So I just put shop in here. And we can also color code this, okay? And I'll show you that here in a second. So let's go shop, S-H-O-P, hit enter. Let's go S-H-O-P. Okay, hit enter. Wait for these bad boys to load. As a matter of fact, what I'm going to do, I'm going to go ahead and make this, let's just make this a 1 hour. Okay, and then over here, I'm going to make this a 5 minute. There we go. All right. So notice how we have 3 charts. We all agree these are all the 3 same charts, right, folks? So in order, what we could do is just link these and make sure that they're all the same color, okay? Everybody understand that? That's what the key link is. So if Shopify, if you make this orange, you would just turn this orange and you would turn this orange. See how I can pick a color? And that means every time you put one name in here, as long as they're all linked, all the same names come up. Okay? Now, watch this. This is crazy. This took me so many years. All you have to do is come to your main chart over here, right click, and go maximize cell. Look what happens. We have 3 boxes up here, and we have these arrows right here. Okay? Thank you, Melissa. I appreciate that. All right? So we have 3 right here. All I have to do is click and go like that. Okay? And yeah, this could be, let's say that you want this as a daily. Let's go to the daily. Okay? So this could be a daily, a 1 hour, and a 5 minute. Do you see how quick and easy that is, guys? Right? Now, I have several things open on my screen. Okay? So mine's taking a little bit longer to load things, right? Because I'm streaming and doing all kinds of stuff from here. But look how easy it is to go through the different time frames. Isn't that cool? I think that's super cool. All right. Boom, boom, boom. Good. Spy is making a move. Let's get up there, baby. Let's get up there. Maybe we'll get our next trim on SHOP. We'll see. We also bought the dip here on Baba this morning. We got several trades working out and working, I should say, working. And so anyways, so this is how easy it can be. Now I want to tell you something. If you notice, things look a little different. All right. Notice on this chart, it's weird looking right down here. You guys see that? But on this chart, it's got my indicators and it's got the TTM squeeze on it and so forth. Well, all I have to do is go to this first screen. Let's just say that this screen is boring. It doesn't have my indicators and I'm like, what is going on here? Okay. Well, I just come up here. Okay. And for me, these are indicators that are in here. And if I come over here, notice where it says sets. Let's go over to sets. Notice how I have created my own sets, okay? And I name them. So see, if I come over here under day, then I can click on day and I can say use set. Notice how everything just changed. Notice how everything just changed. Now I hit apply and I hit OK. Give it a little bit of time to do its magic. I wish I had the Jeopardy song in the background. Boom, there it is. Okay, now it looks trendy. All right, now, Jane, isn't that crazy? I know, it's absolutely insane. It took, guys, I've been trading with Thinkorswim the whole entire time I've been trading. That's not true. I first started with Charles Schwab, but it just blew my mind. It took me so long to learn this. Crazy, right? All right. So, anyways, that's how quick and painless this can be. All right. So, the next thing that I want to go over now is I'm going to move this out of the way, folks. And I want to talk about indicators. And the first thing that I want to tell you is listen, just because indicators can work and they look cool will not make you a better trader. I am very transparent, and I think that's pretty much how I grew. And that's how I built my brand, and that's how I built friends and family along the way. Is I'm here to tell you that trading's not easy. The reason why I actually came up with indicators, folks, was because I was tired of going back and going through all the different time frames and trying to figure things out. As I got better, what I really wanted to concentrate on was timing, right? Like I don't have time to go back and find every little demand and supply zone. Does everybody understand that? Does everybody understand that? Seriously. Indicators should be used for convenience, in my opinion. All right. And I want to show you why I say that. So when I first teach how to create zones, I show our members manually how to find demand and how to find supply. For example, there is a demand zone right here. All right. We're not going to go into details why there is a demand zone there. Okay. But there is. And then price leaves, and guess what? We run out of buyers. It's the same idea as your favorite pair of jeans. If I'm selling your jeans and everybody wants to buy them, I'm going to raise the price. That's called demand. But at some point, people get sick and tired of paying $200 for a pair of ripped jeans. So guess what? That's where clearance racks come up, right? Or we have to figure out where was the bulk of people buying those jeans with holes in them. In this case, we're talking about Tesla. And we identify demand zones by creating zones, okay? Then we create and find supply zones. For example, this is a supply zone right here. Price then pushes up into supply, it rejects, and then price comes down into demand. The first indicator that we use are called trendy edges. They are lines that are on the chart. They are different colors. Notice when I go down in time frames, you're going to start to see different colors. Okay, this is a weekly. This is a daily. Okay, notice you have different colors. And as we get even smaller, we have different colors again. And then as we get into the smaller time frames, we have different colors again. Okay, so the reason why we identified for different colors, different edges, okay, I want to show you this. So we're going to come up here. Okay. Notice over here on the right-hand side, I have a scanner. The edges identify supply and demand on multiple time frames. And I don't know if you guys know this, but we are all different and we are created differently. I think you guys would all agree on that. When I say that, everybody's risk tolerance and everybody's patience is different. So it's very difficult for when traders would reach out to me and say, hey, John, should I take this trade? And I think to myself, well, my account is this size and What size is your account? What are you willing to risk versus what am I willing to risk? But what I can show you is consistency by using levels and how to approach those levels. These help me identify a playing field of supply and demand. Okay? It helps me identify a playing field of supply and demand. Okay? Yes, JP2, you need to establish a new chart default. That's right. Or is there a way to follow the current chart appearance? Yep. So open a new chart. What I have, this is a new chart. So great question. JP2 asks, when creating multiple chart grids, it selects a TOS default appearance. Do I need to establish a new chart default or is there a way to follow the current chart appearance? Yeah, and I could show you that a little bit later. I went through that. It was the sets. So I create a set for each look that I like, a 4-hour, a daily, a weekly, and so forth. Yep. So the weekly edges identify different demand and supply zones. Notice here that this worked very well. Tesla came down into a zone, it pushed to the upside, and it pushed to the next level. Everybody understand that? So our levels, it's pretty straightforward. Any level to the downside is a demand zone. Any level to the upside is a supply zone. They're all different time frames, folks. So, for example, when you come over here, I have a scanner that scans for price at the zones. And this is how we talk about them. The orange zone is for a trader who is wanting to intraday trade. Okay? Meaning your results from your trade should produce profits or stop you out within the day or within a few minutes, really. Okay? The yellow is for traders who are looking for trying to get long or short and looking for results between 1 and 5 days. The pink is for traders who are swing traders and looking for results within 1 to 4 weeks. The blue levels are for me for what I would consider leap trading. Honestly, at a minimum, I would say 3 months, but I prefer 6 months to a year. Okay? 6 months to a year. So the reason why I identified these levels with edges is because I went back in time, folks, and I realized how well they match up with identifying supply and demand zones. Now, what you're looking at is just a previous look of right now. I can come on here and I can come in here on my indicators and I can turn on the past results. So you have to understand that I back tested since the inception of the market. Okay. If you want to back test yourself, you essentially just come in here and we can say show last period. Okay. Now what you'll notice is when I turn this on and give it a little bit of time to work, is now you got a bunch of lines on your chart. Okay, everybody understand that? You got a bunch of lines on your chart. And the reason why we use the past levels is because they work as targets. Okay, now the reason why I turn them off when I am trading in front of everybody is because for me it's noisy, but it's great for back testing, and that's what's most important. Okay. So let's go ahead and say show only last period. Yes. And the next thing I want to show you is that you can turn on the cloud. So people are like, oh, it's just a line. And I'm like, it for me, guys, I get passionate. I'm like, no, it's not a line. It's actually identifying supply and demand on several different time frames within a playing field. Now that you can see that, you can understand these are zones, folks. Okay, to the upside, these are supply zones. And if you look right here, my infamous inside and down formation is right there. It identifies that. Okay, Notice right here, this is a playing field on an orange and yellow. We have a demand zone right here. Okay, demand and supply. Okay. Right click on this. I'm going to turn off the clouds. You don't have to. If you like the pretty colors, you can keep them on and all that good stuff. Okay. Now there's a lot of like cool things that you can do with each indicator, but what is most important is for you to understand that these help identify supply and demand on multiple time frames. For example, if I come over here to our higher time frame here, you guys ready? So looking at a weekly, let's go to a monthly, and let's go ahead and turn on the past results of this. And let's wait for those to populate. Big payday, good job. Good job. Nice, guys. Now, how do you backtest the bigger levels? Folks, one of my favorite sayings is I cannot make this up. Many people have copied me, and many people have tried. But I've been saying this, and I am pretty trendy for about a decade now. This right here is where we go long on swing trades. Remember, the blue lines are for leap trades. And you can see that Tesla took off from here back in the old days and all the way back up. And what's really neat is you get to identify these levels and you get to backtest them and you get to see the results for yourself. So once again, higher time frames, that's where it's at. We reclaimed the lower time frame this year, and guess what? And by the way, guys, I made over, what was my percentage gain on Tesla in the beginning of this year was over 1,000%. Okay. Prices came down into the lower edge. I kept adding in here, and then I was able to sell at the cloud, making over 1,000% in a swing trade in Tesla. Okay. Just using these edges. They are a powerful tool, but as I said before, there is a certain technique around them that we have used and combined the TTM squeeze. Okay. And just because you have indicators don't necessarily make you a better trader. Okay. Now let's move on. The next thing that I want to go over with you guys is going to be the cloud. There are many clouds out there. Okay. Many clouds. And I just want to talk about the basics of the cloud. For example, we had some great shorts this morning, right? I think there was a lot of great shorts this morning. And what it came down to was on the ES futures, when we come over here and we take a look at the ES futures, let's go ahead and click right here. I'm right there. And we look at a 5-minute chart. Yeah, there's nothing proprietary about finding zones. So the next thing, all right, you can find zones. You can learn how to find zones from many different people. I teach it a certain way. Yeah. Yeah, you can actually, we have content on how to identify zones. It's definitely not proprietary. All right. So from here, okay, on a 5-minute chart, okay, traders went short today. I'll get to the reason why they went short underneath this little red box here in a second. But for now, I want you to understand they stayed short on the move underneath the cloud. So if you see other EMA clouds out there, which you'll notice, they all pretty much look the same. Some people just decide to put different numbers in them. Now, for my particular trading style, I use specific numbers, 9, 13, 22, and 44. It's no secret, okay? But what you don't understand is that the candle and the cloud, they're all synced together. Notice that the colors of my candles change. Everybody notice that? You have green, you have white, you have red, you got arrows, you got green arrows. All of these are linked together within one indicator. Now, the cloud itself, the idea here is when we're above it, we look for it to be support. When we're below it, we look for it to be resistance. Does everybody understand that? So you're looking to ride the wave. Does that make sense? So like right now, right? We're above the cloud. This is a great look for bulls at the moment. If this, then that. If price can stay and close above the red cloud right here, then we can continue to the upside. Okay. First level we hit for 41.29, guys. And by the way, we went long right here. Okay. And those are up, by the way. Congratulations. Okay. We used a zone. And we got traders, I believe. I'm looking at the chat room. You guys are, looks like you're using and getting out of those levels. So that's great as well. And you guys can see my little automated levels in there. But the cloud doesn't have to be difficult, but I want to show you a couple things. Okay. Everybody ready? So there's different ways to trade the cloud. Okay. Let's just say that this is the cloud. It's an exponential moving average. When you are short, this is where it's confusing for people. When we're short, what happens are these things cross, okay? And the cloud starts looking like this. And my instruction this morning was, hey guys, I don't want you shorting on the lows. That is like the worst, right? Don't short on the lows. Short when price. So what I mean by lows, don't short here. Wait for price to come back up towards the cloud and go short here. And continue to stay short into a demand zone. Everybody following? So for example, price falls, it comes back up and tests the cloud, it drops again. And in here, price came up to the zone or came to the zone, and then from there, it's a different story. It's a sit and wait. Sit and wait for price to push to the upside. Once we start to get back above the cloud, then we start to feel better about the long. So once again, folks, when we're underneath the cloud, we look for going short unless we came into demand. And when price is above it, we look to go long unless we're going into supply. If you don't know a whole lot about supply and demand, that's okay. Just think of it as a cushion. Your trend indicator. As long as we're trending above the cloud, things are good to go. As long as we're trending below the cloud, stay short. If this, then that. Okay? All right. So the next thing that I want to show you guys is going to be the line in the sand. Okay? Now, what is the line in the sand? It's exactly what it says, folks. It is a blue line, and it was built for the futures. But then we started to use it in conjunction with one of our number one indicators, which is the pre-market zone. And I'll talk about it here in a second. The line in the sand is a line that is created. So I'm giving you the details behind it. It's created by using the maintenance period after the futures close. And what happens, folks, is at good levels, okay? At good levels, let's say the market is trending down towards the end of the day, okay? And let's say the maintenance period. So we close at 3 o'clock Central or 4 o'clock Eastern time. And as soon as we close, have you guys ever noticed on a down day, then they'll pop it up most of the time? Well, what happens is they pivot, okay? And that pivot creates a level that we identify by using the line in the sand. And what happens is if you close above the line in the sand, and I'm talking about this, being the line in the sand, is when price comes down to it, it creates the line in the sand. It really essentially becomes a line in the sand. And depending on the pivot, we go into great detail about that later, then we look for price to hold. And for sometimes when we pivot and we do something like this after the maintenance period and then break down, then you create a line in the sand here. And then when prices move up towards the line in the sand, they are then resistance. Okay? Everybody understand that? So a great example would be the shop trade that we took this morning. Okay? We trimmed at the line in the sand, and I want to show you what that looked like. Okay? So please bear with me. I apologize that The charts are taking a few seconds here to populate. Okay. We got in on the break of the PMZ and we trimmed here. Notice what happened at the line in the sand. Price broke down. Okay. Price created a pivot, and that pivot becomes resistance when price is under it, and it becomes support when price is above it. It is that straightforward. Okay? So far we have edges that identify a playing field of supply and demand. That's it. Okay? Everybody understand? On multiple time frames. The second thing, we have a cloud that helps us identify trend. Now, it does a lot, and it starts to all come together once you start to process it. Okay? And then the third, the line in the sand, pretty straightforward. It's just a line. Okay? It's pretty cool. It's very popular with our scalp traders, and it's very good for a target. Okay? And then the next thing, what I believe is the most beautiful thing that I never really knew how beautiful it was. And then we had a student who came into Trendy Trading, and she became now one of our mods who actually trades live in front of traders. And she is by far one of the best students that we ever had. And she said to us that she would only trade the PMZ, and she would log it every single day for us, including myself, to learn from. Now, we always had the rules in place. We always knew what the PMZ was. It existed way before we met this member. Okay, I want you to understand that. And this is what's beautiful about indicators. Just because you make them doesn't make you the best at trading them. Along comes somebody who is able to be even more disciplined than yourself. And that's what I think is beautiful about everybody that's listening, is you guys should soak up information, and your journey should be faster because you're listening to people like me, and you're listening to people here at Simpler who can teach you the things that they went through in order to get where we are now. I'm telling you right now, folks, 10 years ago, the rooms that I joined and the people that I listened to, it was a horrible experience that led me to who I am today. And I'm thankful. It's a catch-22. I had to hit rock bottom in order to become a very transparent trader who can teach you by showing you results, proof of concept, using the levels that I teach. He was able to show me, folks, show me how to be disciplined around the PMZ. What is the PMZ? What is the PMZ? By the way, guys, we're up 100% on our, give me 1 second here. I am going to put stops in. And let's go ahead and put stops in on SPX. And I'm sorry, guys, that I have to interrupt the session there. But what is the PMZ? The PMZ is derived from pre-market data. Okay? From pre-market data. A long time ago, someone came, or well, shoot, I should say, I still hear that pre-market doesn't matter. And if you don't know anything about me, I was in the Air Force for 21 years, and I retired several years ago. All right? And I know I look young, but the truth of the matter is, it really did happen. I joined in 1996. I did 21 years. It was a good time. Okay? And I just had to go through a lot. And people were like, you don't need pre-market. There's not enough volume. Have you guys ever heard that? There's not enough volume in the pre-market to get excited about. Can you believe that? All right, guys, pulling these stops up some more, baby. Sorry, stops in at $2.90 now. All right, so Because in the Air Force, I had a passion for making things easier. How many of you guys like work in an environment where you're just like, golly, like they made that really difficult? Well, that was my experience the whole time I was in. I'm not going to lie to you. And I used to identify these things and I was like, how can I make this process easier? How can I make it easier? Right? And I'm so sorry, guys. We just keep moving up really fast here, so I need to pull up these stops. We're at $4 already. Sorry, guys, I'm getting too excited. So, process improvement. I'm going to prove to everybody that the pre-market's actually important. Because I want to tell you something, and if you guys have a journal, I want you to write this down. And I say it a lot, and I apologize to anybody that's heard me say it a million times. Okay? A plus B equals volume. Volume does not equal, boom, there's our trade. I think if we're right here, we should have got out at 420, baby. 223%, guys. Congrats on that. So, A plus B equals volume, not volume equals A plus B. Somebody, please, from the trading room here, not our day trading room, but right here, Roberto, Mikey, Larry C., Earl, you guys, somebody please tell me what that means. Listen to me one more time. A plus B equals volume, not volume equals A plus B. No idea. Somebody, I bet somebody can figure it out. Okay, let's figure this out. Who are the variables? Who's A plus B? Thank you, Earl, Jessica. Awesome, guys. Buyers and sellers. How is volume created? It's created by buyers and sellers. So if you're on the team of waiting for volume, I want to show you what happens, folks. This is a great example of SPX today. Price came down into a 30-minute zone. Everybody, please track with me. This should make the hairs on your arms stand up. And first of all, I don't want to offend anybody. Please do not take offense to this because this used to be me, and my job is to teach you not to be like this. The majority of traders are learning the wrong way. It is built by design that you are not taught the correct way. Institutions use fear and greed to move markets. Fear and greed is what pushes price to demand and supply. Do you understand that? Write it in your journal. Fear and greed, or news, we hate news by the way, is a catalyst that pushes price to supply and demand. Okay? When they use fear to push price into demand, the bigger money is present. The bigger money is disciplined. The bigger money is taking your liquidity. Retail traders, you and me. They have found a way to take our money for the bigger move to happen. A plus B equals volume. Somebody in this zone is buying SPX calls. That somebody is not drinking the Kool-Aid per se. When I say drinking the Kool-Aid, we did go short into the zone using futures. But I want you to understand that fear is created in this zone. This is where the majority of traders, okay, this is where the majority of traders jump out of their long positions. Price then goes up. Are you guys tracking? Are you tracking with me? Price goes up. And right about here, somebody says, what do they say, guys? What do people say right around here? FOMO, that's one thing. What's the next thing? Hey, let's open up a position. Time to buy. Well, we just sold for 224%. Okay, guys, 224% right here. Price typically will fall. They take the liquidity from these guys. Unfortunately, we find a level down here somewhere on a smaller time frame. And the same process goes over and over and over until you decide that what you're doing is not working. But again, I want to lead with this and I want you to understand. No matter what I show you, no matter what I trade, what is going to make you a better trader is actually between your ears, folks. It's between your ears. It's everything you've been taught. Have you been taught the right way? How to think like an institution? Our job is to take money from people. We need an edge on people. And institutions have an edge on you and me. We are taught to look at free indicators. We're taught to do exactly what the masses are doing, but the masses only make up a small percentage of the actual liquidity in the market. We are not that important. But if you want to try to cross over and start joining in trades that are the exact opposite of what you're used to, I strongly encourage you to learn about supply and demand. Strongly encourage you. And then on top of that, what I would encourage you to do is listen to Mark Douglas. Anybody know who Mark Douglas is? You guys know who Mark Douglas is, right? Yep, rest in peace, man. Awesome. Freaking the best. And I just went down a black hole and I apologize. I do that. I told you guys I could talk. We didn't even get to talk about the PMZ. This is too funny. So let's end with the PMZ. I'm way over my time. So the PMZ is a pre-market zone. We make it as mechanical as possible, folks. You go short under it and you go long above it. It tells you what your risk is for the day. And we have automated targets, those edges that I told you about. For example, we went long over shop. Notice that your risk is 9 cents today. Guys, if you're trading equity, obviously you took 100 shares, you get stopped out, you're going to lose 10 bucks. If you take a delta 50, right? Do the math. Again, you're not going to lose a lot. We are very mechanical about this process. Long above it, short below it. Today's results just on ES futures alone. You can come over here and take a look at it, folks. We have traders in here who, what did you guys make on your futures trading today? 60, 70, 80 points or something like that. Absolutely incredible. You know, you guys are amazing. Like seriously. All right? And I mean, seriously, you're amazing. Most of you could trade better than I can. I'm not embarrassed to say that. You know, I got traders, man, they just are so good. And that's what my vision was many, many years ago, is to create some of the best traders. That's what I love. That's why I'm here. Look at this. Short out the gate, we had a zone. I want you to look at this, folks. I need you to understand this. If you know anything about futures, 1.3 of risk, guys, is less than $100 of risk. And your reward down into a zone, if you're looking at 50 points, it's $2,500 per contract. Micros, you're risking what? 10 bucks? $10 for how much? I mean, depending on how many points you get. The biggest thing about the PMZ, it creates a risk to reward for traders. You get your risk up front in the morning. It's going to tell you how much to risk or what the risk is based on levels. The automated levels give you an idea where you could hit as far as a target is concerned. Does everybody understand that? So notice over here on SPY, maybe you don't trade futures. Boom. Today, we were looking for a demand zone to the downside. Your risk on SPY, folks, I don't care if you're trading futures, options, or equity. 13 cents of risk and your results to the downside. And again, disclaimer, providing that you could hold this long, providing you stayed short underneath the cloud the entire time, you had a risk of under a quarter. And prices dropped from 414 into 408. That is what I call a trade plan and a trade setup. And all of these things combined really help traders to be consistent. Now, I've talked a whole lot, way over my time. I apologize, moderators. If you guys have any questions after this, please reach out to me. This video will be recorded and put it on the site. And I hope you guys enjoyed. I'll kick off. I'll leave this session and make sure we stop recording it. But if you have questions, you can always ask in the main chat, and then I'll be happy to share anything I can. Okay? So appreciate you guys.